Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments. Market update: OpenAI concerns, semiconductor technicals, tech earnings, and UAE oil policy. This video presents a direct informational narration of the source document. So, looking at where things stood as of 8:35 p.m. Eastern Time on Tuesday, April 28th, we saw the four major indices closing lower. The Nasdaq and the Russell really underperformed, with both shedding more than 1%. And there was a big catalyst here. A Wall Street Journal report came out indicating that OpenAI failed to meet their expected targets. That instantly triggered some real concerns regarding data center spending, which led to a pretty significant decline in AI infrastructure-related equities. In fact, the Philadelphia Semiconductor Index, the SOX, tumbled over 3%. Every single one of its 30 component stocks declined, officially ending an 18-day gaining streak. Meanwhile, shifting gears to the Middle East for a moment, the first Japanese tanker fully loaded with crude oil just successfully navigated the Strait of Hormuz without any Iranian interference. Over the previous weekend, Iran submitted a new proposal. They suggested the strait be opened first before discussing any nuclear issues. As you might guess, that's a sequence the U.S. government is highly unlikely to accept, and reports indicate Iran will actually submit a revised proposal in the coming days. The broader narrative here points toward negotiation and de-escalation, even though international oil prices remain elevated. But concurrently, we got some massive news. The United Arab Emirates, OPEC's third-largest oil producer, suddenly announced they will exit OPEC and OPEC Plus on May 1st. The UAE plans to independently control its crude oil production and gradually increase output. To understand why, we have to look at the recent Middle East conflict. The UAE has incurred substantial losses, suffering numerous missile and drone attacks. It's severely impacted their infrastructure, capital, human resources, crude oil exports, and tourism. We're even seeing anecdotal reports of foreign professionals leaving the UAE since the onset of the conflict. On top of that, the UAE has faced long-term production suppression by Saudi Arabia and OPEC. They have this highly developed crude oil infrastructure, but it cannot operate at full capacity. And that is costing them. It's resulting in an estimated revenue loss of at least $50 billion annually. What's really striking here is that this sudden exit announcement leaves absolutely no buffer period. It indicates an immediate pivot toward independent revenue generation. Now, the UAE isn't the first nation to leave the organization. They're following previous exits by Qatar and Angola. So what does the market consensus say about this? Well, the short-term impact on oil prices should be limited, mainly because ramping up production requires time. However, in the medium to long term, that increased supply from the UAE is expected to exert slight downward pressure on those elevated oil prices. Moving on to our next section, technology sector, OpenAI operational concerns. Shifting to the technology sector, let's dive deeper into that Wall Street Journal report. It noted that OpenAI failed to achieve their internally set revenue and user growth targets. Now, OpenAI did respond, stating that their business is fully operational. But a critical detail emerged from the report regarding OpenAI's chief financial officer. The CFO reportedly expressed concern to leadership that insufficient revenue growth could leave the company unable to pay for future computing contracts. To put that into perspective, OpenAI has committed a massive $1.5 trillion to build data centers, GPUs, and memory chips, plans the CFO reportedly fears could fail to materialize. This traces back to an interview last year where the CFO suggested that if OpenAI faced operational issues, the government should provide guaranteed support. The U.S. government subsequently shot that down, stating that if one AI company fails, others remain. CEO Sam Altman later countered as CFO, stating the company did not need government support. Furthermore, ChatGPT was slated to reach 1 billion weekly active users by the end of last year. That's a massive milestone that remains unannounced, as the platform reportedly faces high user churn rates. There's an additional risk factor hanging over OpenAI, which is reportedly preparing for an IPO. This involves the ongoing litigation between Elon Musk and CEO Sam Altman. A trial began in a California federal court, with a 9-person jury tasked with determining whether Altman and others violated OpenAI's founding mission as a public interest nonprofit laboratory. An adverse ruling here could severely impact OpenAI's IPO prospects. Polymarket prediction markets initially showed a 51% probability of Musk winning, but that has subsequently dropped to 35%. So if OpenAI were to actually face operational failure, data indicates it wouldn't imply a systemic slowdown for the broader AI industry. Competitors such as Google's Gemini and Anthropic's Claude continue to grow, suggesting OpenAI is just ceding market share. The entity facing the highest direct risk in an OpenAI distress scenario is actually Oracle. Oracle's largest contract customer is OpenAI, and Oracle has accumulated high levels of debt to aggressively build data centers based on these contracts. If OpenAI cannot meet obligations, Oracle faces severe near-term revenue shortfalls. Regarding broader semiconductor exposure, while interconnected supply chain risks definitely exist for AMD, NVIDIA, and TSMC, their balance sheets and operational metrics are substantially stronger than Oracle's. Even if OpenAI's revenue growth slows down, the broader capital expenditure plans among other major tech companies remain intact, which ensures continued demand for NVIDIA and AMD hardware. In recent trading, NVIDIA experienced a standard technical retracement, falling 1.59%, which serves as a neutral indicator pending upcoming earnings data. Let's look at the charts in our next section, Semiconductor Technical Analysis. For AMD, short-term velocity was really elevated, reaching the approximate 350 target level earlier than expected. A pre-market gap down confirmed technical weakness. Following heavy volume, the price action formed an island top pattern, creating a mid-level resistance zone between 335 and 348. A breakout above 348 is necessary to target new highs. Long-term, Wall Street estimates project targets around 400, though this is heavily dependent on major technology companies' capital expenditure decisions. We see a similar setup with the indices. The SOX index displays a similar island top pattern after breaking the previous day's low. It established minor lower support between 412 and 420 and heavier resistance between 450 and 460. The SMH index also broke Friday's low to form an island top, establishing mid-level resistance between 499 and 508. Failure to break these overhead resistance levels across the semiconductor sector could increase supply pressure and confirm a deeper technical correction. This broader market pullback we're seeing is largely driven by profit-taking. Finally, let's wrap up with our last section, macroeconomic and earnings catalysts. Looking ahead, market expectations fully price in the Federal Reserve maintaining interest rates exactly where they are, unchanged. Jerome Powell will deliver his final quiet period speech, which is expected to remain stable without surprises. The massive upcoming catalysts are the earnings reports from the major tech firms, Microsoft, Amazon, Google, and Meta. These are going to provide crucial visibility into data center capital expenditures and their actual return on AI investment. To give you an idea of what to expect, options market pricing indicates 68% probability implied moves for these upcoming earnings reports. Microsoft is centered at $425 with an approximate $30 fluctuation. Amazon is centered at $260 with a $19 fluctuation. Google is centered at $350 with a $20 fluctuation. And Meta is centered at $670 with a much wider $50 fluctuation. You can expect trading volatility to concentrate heavily in after-hours trading as these reports are released. So with all these crucial data points dropping, how will these massive capital expenditure numbers ultimately reshape the AI landscape in the coming quarter?